Hey everybody, Tuesday evening financial thing live stream. How are you today? That's the most important question of the day, is how are you doing out there? Everything is good over here in Florida. It's very hot, very balmy. I don't even know how hot it is today. Let me look. It's hot. The one negative thing about living partially in Florida is the heat during the summertime. It's 91 degrees Fahrenheit today. So yeah, what are we going to talk about? Oh, if you can hit that thumbs up for me, it really helps out with the YouTube search algorithm. Only takes a second to do, so hit that thumbs up. Hopefully you'll enjoy the content this evening. We are looking at the stock market. We're looking at some cryptocurrency news. It's been a crazy last week for cryptocurrency, so I would feel that I wasn't doing you a service if I didn't talk about what the heck is going on in the financial markets in the crypto world for anyone that's interested in that. We're going to talk about trading stocks today. Some of the mistiming, missteps that I have had since kind of the early May the 2nd onwards, selling some of the stocks that I sold off, and how much I'm going to show you how much that has actually cost me in the Trading 212 account. And it really is a good lesson out there, not only for myself but also for anybody out there that's a long-term investor, is how chopping and changing, moving stocks around, selling, buying, how it could really cost you in real terms, in money value. I'm going to show you some examples of some of those missteps that I've made over the last month in the Trading 212 portfolio, so you can avoid doing the same thing. And we're going to look at stock market news. We're going to look at some Terra Luna news, which is really one of the causes of the big crypto meltdown that we've had in the last week, which actually I'm pretty impressed with generally how well the market has held up in the cryptocurrency world, especially Bitcoin and Ethereum. I thought they would have crashed a lot harder than they did. So considering what happened, we're going to look at why that happened. It's a really interesting story. If you don't follow cryptocurrency, you're not even interested in it. What we saw over the last week was really interesting. We saw one of the biggest meltdowns of one of the larger cryptocurrency coins that we've ever seen. Top 10 coin, billions of dollars of market cap just instantly wiped away in the matter of a day or two. It was crazy, and we've never seen anything like that. And considering that has happened, the market has actually been pretty resilient. So we're going to look at maybe why that happened, look at some of the conspiracy theories out there. But I do want to show you the Trading 212 account because I thought, it'd be really interesting to look at that today. So anyway, I hope you are doing well. Thank you for joining. Hope you enjoy the content today. These streams are done out of love. They do take several hours of research and digging through data, trying to find interesting things to talk about. So I hope you enjoy it out there, and that's it really. Oh, one other thing, on Thursday I did say that this Thursday is going to be Landlord Invest. Philip is actually not coming on until the 26th, which is a week from Thursday. I got my dates mixed up, but he'll be with us live. So put that on your calendar, May 26th, Thursday evening, 7:30 p.m. UK time. We'll have Philip. I'm not going to try to butcher his last name because I'll just call him Philip K. But I think I got his last name wrong on the YouTube thumbnail. But that will be next Thursday, May 26th, not this coming Thursday. Hopefully you will find that enjoyable, having a chat with him. And he will be audio only. He's requested to do a audio thing. I'll be on video as normal, but he didn't want to be on video, so totally fine. The main thing, is we get the information from him out to you, whether that's video or audio. Quick hi to everybody in the stream, as we always do. Mike Powell is here in Southampton. Colin, Peak District, warm and sunny. Showery, Southampton. Robert Peace from a very hot Crete, Greece. How hot is it in Crete? I have to look now. Crete, Greece weather. 21 degrees. That's quite nice temperature. Up to 27. Ooh, very nice. Peter Vincent Leatherhead, lowly, warm and sunny day. David Dawson is here. The compounding investor is here. Nice. Welcome to the stream, compounding investor. Carful is here from a scorching Essex. I like that, Essex. Joey Essex. Is that Towie? Is that what? Yes, Towie. I got a bit addicted to that show at one point. Had to cut it off. It was bad. Brian is in Woburn, 25 degrees centigrade. Paul Bagworth from a rainy Kenilworth. Aki Chap is here from Accrington. Everybody else, hi. Welcome to you. Let's get right into this trading 212 portfolio and see where we are with it. Actually, I thought it was going to be a bit of a disastrous time with the trading 212. Ooh, that really is zoomed in. Why is that zoomed in? Hang on. That's hold on. There we go. Okay. The wonders of technology. You never know what's going to happen live. Okay. So where we are right now with the portfolios, we're actually sitting pretty healthily at £17,184 and 42 pennies. Everything is looking pretty good as of today, but what I did do last week is I sold off even more equities and went mainly to cash. Right now we've got £3,898 invested. We're sitting in £13,283 of free funds. So I've lightened the load in the portfolio. You can see here everything's sitting around between £500 to £700. Things still doing well. I got rid of gold, the Barrett gold position. And then I just made some trades just to lighten up because I really thought that we were heading for more difficult times. And that was just kind of where I thought the market was going. I wasn't sure. But it's never wrong to take profit, as always, with these portfolios, especially a trading portfolio, hence trading 212. We're just trying to preserve capital. But the problem is, now I'm in a really difficult position because we're sitting with all this cash in the portfolio, 13 grand, and things are just looking so choppy right now in the stock market, so volatile. I mean, we have stocks like Walmart today, which is a huge, blue chip, New York Stock Exchange, WMT down at 11%. So again, we see this other big market cap, 360 billion US dollars, drop 11% because of poor earnings. And everything just seems really, really volatile. So I'm in this really weird position of not only in this portfolio, but having traded in and out of these oil stocks and these other things that we had in the portfolio, now in a very difficult mental position of feeling really uncomfortable about the markets and not wanting to necessarily deploy these free funds into the markets because I really have no idea what they're going to do. That's why I titled the stream, I have no idea what I'm doing. I'm not a stock trader. This is the truth. I don't think really anybody knows. I mean, nobody would have ever predicted that these markets would have done what they're going to do. I think a lot of people who come on and say they know these things are just really full of it, because I certainly don't. Timing has really been everything. So basically this really difficult position of not particularly feeling comfortable deploying not only this cash but other cash in different portfolios into the stock market. It feels very choppy. If we look at the markets right now, today's been a pretty good green day. The S&P up 1.46%. The FTSE up about 0.72%. I expect the FTSE will have another green day tomorrow. Dow up about 0.9%. But look at these oil numbers. Crude $112 a barrel. Brent $114. And natural gas has just really jumped up to $8.3. And it's hard predicting, where these numbers are going to go because of what everything is happening in these global economies. And I get this horrible sinking feeling in my stomach that the bottoms could fall out of these markets at any time. But we just haven't really seen that happen aside of the last, couple of weeks where we did see a pullback in the most major markets like the S&P. We didn't see as much happen in the FTSE as we did in the US markets. So if I can pull this chart out. Oh, no, that's not what I'm looking for. Show me there. There we go. This is the last month. You see, really the FTSE has held up pretty well from 65.60. We're still only at 75.18, which we saw it go down here to the 7,100 point. So we've had just a lot of investors buying these dips, coming in from these high points, watching the markets drop. So that's about a 10% drop. And then coming in and they're just buying these dips. And this is what's holding up the market, these dip buyers. And I still have this feeling that the bottoms could come out of these markets at any time. And I just have this really uneasy feeling. And I thought when I sold off a lot of equities at the beginning of May that I sort of dodged a bullet with the trading 212 portfolio, but it turned out to be in most cases just a misstep timing situation that's actually cost quite a lot of money in potential gains. Now, like I said, it's always good to take profit. Sometimes as investors we look at the missed opportunities of missed out gains. We don't always think about how things as a big picture have done from, say, a couple of years ago. And this, obviously, if you've been following the channel, this one portfolio has basically tripled, which is great. So I'm not a greedy person. And I think it's good to take a step back and just say, hey, the portfolio has done really well, so we missed out on some potential gains. But really, I want to show you these numbers because for anybody that's watching this who isn't really a person that market times and tries to trade, and maybe you thought about doing that. Maybe you thought about, I could probably take some of my portfolio and try to buy these individual stocks, try to trade in and out of the market. When the market goes down, I'll buy more. When it goes up, I'll sell and try to get it right. Chances are you're not going to get it right. And I study this stuff constantly, and I still don't get it right. So what I want to show you here, hopefully this will fit on the screen, is this spreadsheet that I put together. And I titled it Market Timing May 2nd of 2022. And I took these prices today of what the price of these stocks were when I wrote this spreadsheet. And when I sold these stocks at the beginning of May, how much each position has actually cost me through mistiming the market. So you can get a real example of why it's best, why I always promote these index trackers and say, look, most amateur investors, even myself included, are better just putting money into an index tracker and forgetting about it. Not trying to time the market. And this is a relatively small portfolio for some people. It may be a lot. 17 grand, certainly nothing to sneeze at. But I know some of you out there have probably got portfolios that are much, much bigger than this. So these numbers, if you were trading these stocks, they could be much bigger. But this is just off my relatively small portfolio of 17,000, which I think is big, but I use it small in the grand scheme of life. So we're going to look at CVE, which is Synovus right now, trading at £20. Let me close this out. Hold on. Let's get rid of that. We'll get rid of that. Get rid of that. £20 and 94p. So it's come down $20.94. So we'll go ahead and update this. So I sold back on May 2nd. Let's see, we'll go down to the history here of Synovus. You can see here I sold back on the May 2nd, 3rd, and 13th. Sold positions here, 35, 30, and 9. I didn't do the 9, but I put these 35 and 30 stocks that I sold on the 2nd and 3rd on the spreadsheet. You can see here, I sold at $18.16, and the price now is $20.94. So those two trades alone cost $158.20, which I think is about 130 pounds. So definitely got the timing wrong on those because I thought this stock was coming down. You can hear FANG. This is the second stock that I made sales on. Let's go ahead and find, where is it? Where are you, FANG? I think, well, I don't hold any FANG position now. So let's go ahead and look at the history, pull that up. Show me FANG. Where are you, FANG? Is this it? I can't find FANG now. Hang on. There. Let's go ahead and look. Oh, FANG. Yeah, FANG was Diamondback Energy. No, okay. So where are you, FANG? Here we go, FANG. $131.45 today. Let's look at the history of FANG. You can see here, May 2nd, May 3rd, we sold these two positions. And if we look at the spreadsheet of FANG, those are the actual 3 sales that we made. And sold out at $125.24. Now today's price is, or when I read the spreadsheet, was $132.03. So that trade alone, just this first one, which I think was right here, sold 5 and a little bit, 5 and change. That cost $316 and 40 cents, and these other two were minimal. But yeah, so that one alone, that FANG trade, missed timing, $315. Flex, another one. Flex natural gas right here, currently trading at $28.99. This one's come down a little bit today. Let's go ahead and change that. So that trade cost $18.44, so we lost $18. Now, one that it did work out for, we sold Barrick Gold. Sold at $22.55, and now the price is around $20.58. So that one profited us from not hanging on to it. But then on the second trade, we lost $6.65 in possible uptick value. So that one was a positive trade. International shipping right here, INSW, lost $228.86 for the mistiming, selling out at $21 and a penny. And LPI, this one actually worked out well. This is a lucky trade, really. But LPI we sold at $69.37, and now the price, let's see what the LPI price is. Make a change if we need to. $63.15. So that one's dropped a little bit. It's had a bit of a pullback today. So that trade actually profited us $366.29 that we saved by not hanging on to LPI. Occidental lost $113 in uptick. Tullow Oil lost $25 in uptick. And Vermilion, we lost $68.61 in potential gain. So right there, the total of those trades of selling out too early, it was $527.33, which is about 421 pounds. So again, this really highlights the problems of trying to time the markets with these individual stocks. Whereas just sticking it in a index tracker and forgetting about it and not touching it probably would have resulted in not taking these losses like I did, which in the grand scheme of things, in the grand scheme of the portfolio, £421 is really about 2% of the portfolio, but still, this stuff adds up. If I constantly were making these timing mistakes throughout the year, that could well balloon into thousands of pounds in lost potential gains. Now, it could go the other way. I could get it right, and the market could drop, and these could be plus numbers, but my market timing hasn't always been very good. So I would say over the long run, I'm probably going to be in the negative red if I keep trading and making these mistiming trades. But now the real question is, what the hell do you do with £13,283 in a market that you feel like is really being propped up? I think what happens in June is we get these interest rate hikes, probably another 0.5%, 50 basis points by the US federal government or the US Fed, and then the stock market again gets fidgety and starts to come down. Or we get inflation numbers that are bad in the UK or the US. These markets could quite easily topple. So maybe you have some ideas. I don't have all of the answers. I'm not really sure what the play is today, at least, for putting these funds to work. I know it's certainly not bonds. None of the markets are safe. Cryptocurrency wouldn't be a bad place to probably deploy some of this money because the crypto market has taken such a beating. But I already have quite a big exposure to cryptocurrency. I don't want to be overly exposed. Diversification reasons. I've always said that I'm willing to go to a certain amount. So putting these funds into a bond fund isn't particularly great. You can get, I think I got an email from Ford Money this morning saying the interest rates have gone up to 1.1%. But again, when inflation's 5, 6, 7%, that's useless. So index tracker, bond fund, not so good. Gold, I don't know. Let's look at the gold. Look at the gold prices today. $1,826 for gold. See down here. Again, I've never been a big fan of gold, but you're just looking for safe havens, where you could try to get some yield, where you could put your money that's relatively safe. So 2051, we dropped down to 1,820. I think gold potentially has a high upside, but again, it's no given. Silver is certainly not doing really well. It's up from a high of $26, now down to 21. Platinum I really don't mess with, because I don't know enough about the markets, but that's taken a bit of a hit. Palladium, yeah, look at these charts, right? They look very similar for people that want to invest in precious metals. Don't they? Palladium, platinum, palladium, gold look very similar. Let's look at that. It's doing better than the S&P 500. Let's see if it's doing better than the FTSE. Yeah, better than the FTSE. This is gold. This is the FTSE. See these drops. So really not sure. I don't think there is any safe haven at the moment for deploying funds. If you're a long-term investor, index trackers, I think it's the way to go. Just cost average into them and forget about them for 10, 15, 20 years. And go from there. But, this could change. Tomorrow I might say, hey, I see some opportunities within this sector. Maybe tech. Tech has taken a really nasty beating. I put in a buy order for Tesla at $680 US. and that didn't fill because this is now up to 755, so that's a missed opportunity. I was looking at Tesla down here. What was the price? It went a little bit below 700, I think, at one point. I said, 680, I think, is probably you could get a 20% upswing, which turned out to be not 20, but 10%. So there could be some opportunities in tech, but so far I don't see it yet. We'll see what happens anyway. So I just wanted to show you those losses that have come from selling out too early, just as a little learning opportunity for you out there if you're thinking about moving in and out. So we have to look at the crypto markets because everything has kind of been crazy. What's happening nowadays is, before a year ago, I used to talk about how cryptocurrencies would be decoupled from the stock market. But what we're seeing is a lot of retail investors are coming into the crypto space. And that's what tends to happen when something starts to go up a lot. People pile in. And then what happens when the stock market takes a dump, starts to go down, these cryptocurrency investors who don't have a lot of time in the market and probably not very experienced, a lot of the times they don't even know what they're investing in. But there's this correlation between the stock market and cryptocurrency. When the stock markets are doing poorly, then the crypto markets do poorly. And so we're seeing this coupling now. People get scared and they sell. It's kind of human nature. It doesn't matter what we're talking about. If all of a sudden gold were to dump $1,000 per ounce tomorrow, a lot of people will probably sell their gold because they get scared. So we're seeing Bitcoin now still holding around 30,000. Oh, no. It dropped to 29,718. But over the last 7 days, you can see this kind of just choppy chart. Blah, blah, blah. Up and down, up and down, up and down, up and down. And this market cap has really gotten a lot smaller now. I still personally think Bitcoin in the long-term 10-year outlook is going to be just fine. And this $29,000 buying point, again, is a really good opportunity if you don't have any exposure to Bitcoin to pick some up. Not financial advice, of course, but the opportunity is there. So what happened with the crypto market? Well, we had this crypto meltdown of this coin right here called Terra Luna, which really tumbled and caused a topple of some of the crypto markets in general. Basically, this coin, which was founded by a pretty young guy out in Singapore named Do Kwon, and this coin was kind of like the darling of the cryptocurrency world. You can see here it reached, see where its highest point was, 116 US dollars a coin. And then starting on May 3rd, you see how it just tumbled all the way down into less than a penny. So right now, sitting at 0.03018, so basically worthless. So this coin absolutely crashed. And it had a massive market cap. It was huge. Market cap was tens of billions of US dollars. And it just absolutely crashed. You can see the market cap here. And what this means is market cap is actually real money. So it had a $41 billion market cap that has since fallen to $1.24 billion. So that is actual money that has just disappeared. So it's disappeared out of people's net worth. This isn't, money that's gone into thin air. It was real money that people had invested in this coin. There's a lot of people out there that are really sorry that they took these big risks with this coin that was a top 10 coin, and many considered it was going to be the future of cryptocurrency because it was considered decentralized and the owner, and there was a really strong community. So why did this coin go to absolute almost zero? Well, it's coupled with this thing called a stable coin. You may have heard of me talk about stable coins in the past. Stable coins are basically coins that are designed to peg to a currency. So this coin, this Terra USD, should have been $1 to one Terra US dollar, should have been the equivalent of $1 US. That was what it was designed to do. And Terra stablecoin, this Terra USD, and the Terra cryptocurrency, Terra Luna, were coupled together, and they worked like a seesaw. So when supply and the price was moving on one, the other coin would algorithmically either burn or increase supply to keep this US Terra stablecoin at 1. So 1 to 1. Unfortunately, the stablecoin lost its pegging to the dollar. And if you take a long outlook here, you can see how this coin right here was pegged at 1 to 1. And this, a lot of people had a lot of money in this stable coin, think it was safe. And then what they were doing is they were staking this coin. And I think we looked at this before. They were staking it in this this anchor protocol. So people were depositing their stable coin, think it was safe. And they were trying to get these returns, right? And these returns were listed at about 17 to 18%. So people would think, oh, I can put in, 100 of this Terra stablecoin, and I can get 17.8, 18% return a year. That's $100, so $17.80 Terra coins back. And this is a pretty safe investment. What happens is there was this big run on Anchor, where you can see right here the total deposit right now, and I'm surprised this is still so high, but it's $1.1 billion, right? So if you look here, so you can see Anchor started to take off. This is just within a year. See here we had $1.2 billion of staked Terra stablecoin that was getting all this interest. People were getting paid this 18%, which a lot of people are saying this is a Ponzi scheme. How can they even pay that much? And then you can see it start to rise, and it went all the way up to $14 billion was staked in this protocol of this Terra stablecoin. And then people started to get scared. And once that depegging happens of that 1 to 1 of that dollar, it then dropped. See here, you see when that, if we look at the last 7 days, you can see when everything started to really hit the fan. It was right here. We get this depegging from 1 to 1 all the way, flash crash down to 78 cents. That's when people really started to panic. Then it rebound, and then crashed, rebound, and then crashed. And this is where people lost confidence, started selling. And then it just crashed all the way down now to 11 cents. So that pegging is gone. Essentially this coin is dead. So then people made a run on all of this money that they had staked inside this Anchor protocol. So billions of dollars withdrew very fast. You can see it all start to go out here. And this borrowing amount was about $5 billion at one point. So people were borrowing against their crypto. And now it's just 45,542,000. So basically this can't survive. This protocol here can't survive because there's no way for them to pay 17, 18%. So a lot of people were saying it was a Ponzi scheme. There are other people that think, I'm trying to find the article, that this was a complete setup. So what they believe happened is a trader or a group of traders borrowed a whole bunch of money, billions of dollars, put it in this Anchor protocol and staked it, and then withdrew it all at once, made a big withdrawal, made the price drop momentarily, and they were exploiting these price drops. And when you see this, when you see the price drop on the stablecoin, when it goes down, right? This dip right here, this type of stuff is enough to make people scared and make a run on withdrawing everything. And this is what they bet on. This is the conspiracy. We don't know if this happened or not, but these traders put in billions of dollars into Anchor, then pulled it out all in one go, boom, the price drops, then people get scared and it causes a complete collapse. It's pretty sad because this is real people's money, and I know we often talk about diversification, and there was a lot of people that were taking far bigger risks than they should have done with this coin. There's been stories of, it's hard to say if these stories are true, but on Reddit, you can see here, this person posted they lost over 450,000 US dollars. I cannot pay the bank. I'll lose my home soon. I'll become homeless. Suicide is the way out for me. There's been postings like this about suicide. People who have lost a ton of money, putting way too much into this crypto coin itself. So it's very, very sad. Even on Luna's Reddit, here you can see for everyone panicking, here are some national helpline numbers. There's a lot of really just sad stories on this Reddit. This is pretty funny though. Today's dinner after investing in Terra. So you can see a picture of drawn in chicken bone. So they're saying they don't have enough money. But yeah, it's very sad that people have lost a lot of money. We're talking about billions and billions of dollars. And it really highlights the risk. Just think about what you're doing if you're investing in. And that goes with anything, right? Stocks, shares. We saw the collapse of the London Financial mini bond, and the bond go down in the UK. So this is not just a cryptocurrency thing. This is anything in life. You want to be diversified. Only take on the amount of risk that you can stomach. Now, if I lost this entire 212 portfolio, it would certainly sting, but it's not going to bankrupt me. So I'm really taking on a calculated amount of risk that I can stomach. And we're still somewhat diversified. It's not like this entire portfolio went into one stock. Yeah, so now a lot of people are wondering, well, what happens next in the crypto market? Is some of the other stable coins now, are they at risk? So you can see here that the third and fourth biggest coins inside of the crypto world at $75 billion and $52 billion market caps each, are they at risk of something happening to these coins? Because if something happened to this coin here, Tether, which a lot of people are not really secure about this coin, but they've had trust in it. If something happens to this coin with a $75 billion market cap and it were to depeg from the pretty close to 1-to-1 ratio that it is right now, that could certainly bring the crypto markets down with it. And again, I think this is, again, temporarily. You can see here it depegged here. This is Tether for a split second at 97 cents. That's unusual when it's pegged 1-for-1, but that got people very afraid. There's a lot of people now that are not sure if they want to continue to hold this Tether. And then we have USDC, which is a well-liked stable coin that has, actually, you can see it spiked up here a little bit. This is only a very small amount. That's $1.007 to 1. But you can see that's pretty much just kind of stayed level. A lot of people are concerned that if something happens to one of these two stable coins, this Tether or USD coin, that it could have a really negative effect on the whole cryptocurrency market as a whole. Now, I think, again, if something did happen to one of these stable coins, it would bring the markets down, of course, but I still believe everything is temporary. People forget, they have short memories, and I think of the long-term Bitcoin and Ethereum will survive and be okay. But there was a news story here on CNBC about Tether, saying investors withdrew over $7 billion from Tether, raising fresh fears about the stablecoin's backing. The so-called stablecoin slipped below its intended $1 to 1 peg on Thursday amid panic of the collapse of UST, which is the Terra coin. And now the SEC and the US government and some other governments from around the world are really looking at these stable coins saying, wow, maybe regulation needs to be had, because the idea that somebody could use billions of dollars in a stable coin is pretty scary. In other news, El Salvador's president promotes Bitcoin adoption by the emerging countries. Nayib Bukele, I don't know if that's how you pronounce his name, but he hosted financial representatives from 44 developing economies at the Alliance for Financial Inclusion's annual meeting based in El Salvador. It's pretty cool. He had people from Paraguay, Haiti, Honduras, Costa Rica, Ecuador, Angola, Ghana, Namibia, and Uganda, Bangladesh, Palestine, and Pakistan. So these are emerging developing countries where Mr. Bukele thinks that Bitcoin could really benefit them. He's a real Bitcoin believer. Look at that photo. Look at these people all dressed in blue. Except these two, they didn't get the message. She's yellow and she's green. But he has hosted that. So we're going to see what comes out of those meetings. Right now we don't know. I don't really know what has been discussed, and whether Bitcoin will be embraced by these developing nations that are really struggling with some of inflation problems and their currencies becoming devalued. And Mr. Bukele is trying to tell them that Bitcoin is good for the world. Look, right here. Bitcoin is good for the world. We shall see. The Wall Street Journal, as we spoke about before, saying crypto prices are moving in tandem with traditional stock markets, which is punishing investors. Cryptocurrency prices are moving in lockstep with stocks and bonds like never before, punishing those who bought Bitcoin and other digital assets in part to diversify their investment holdings. The 3-month correlation between crypto, Bitcoin, and Ethereum and the major U.S. stock market indexes hit its highest level of record of the last week, according to the Dow Jones market data. That level was between 0.67 and 0.78. So that means the correlation is very heavily weighted to the stock market. A correlation of 1 suggests the markets are moving in complete lockstep, while a correlation of 0 means they're not moving at all in together. Richard Crabe, who runs a quant hedge fund in San Francisco called Numerai, said crypto has become part of the mainstream financial system, and that's not good for its viability as an alternative asset class. What he's talking about here is a lot of institutional big-name companies are coming into the space, and that's creating this lockstepping of movement within the stock market. Mr. Crabe said crypto is not serving its original purpose as an uncorrelated asset. Traders and analysts say one reason markets are moving in tandem is because so many traditional investors have added digital cryptocurrencies to their portfolio, as they have suffered from their stock and bond investments in the most recent market rout. Some investors have been raising cash by selling crypto. At the same time, weaknesses in stocks and bonds have reduced the appetite many investors have for cryptocurrency. That all is about fear and greed. People get scared. They move in and out of assets. And this is what is happening right now with some of the cryptocurrency space. And I think that this is temporary. I think what happens in these markets and again, this happens in stocks too. If somebody gets burned badly enough in a stock, they stop playing with fire, and then they tend to exit the market. And I think this is what we're seeing right now with Bitcoin. It's gone back over 30,000 for the 1,800th time this week. What we're seeing is this big shakeout from this high. It was where we're shaking out these investors that really weren't in it for the long term. And the markets have to find a floor to shake these people out. These people that are moving in and out when they get scared. And then from there, Bitcoin can really start to recover. But I think it's going to be a while. And we could be in this bear market now for next several months. But it does give one a chance to accumulate at these low prices, because back here when the price was 63,000 for Bitcoin, people were saying it's too expensive, I don't want to buy it. Why would 66 grand? I don't want to buy it. I'm going to wait for it to pull back. I'm going to wait for a dip. And then they get this wonderful buying opportunity of this dip, where if you were fast on the trigger fingers, you could have gotten in at 25,000 US dollars. Right down here, we had a flash crash down to 25,000. A lot of these people are still saying, "Oh, I don't know. Now the price is low. Emotionally, I don't think I can invest. What if it goes low? What if it goes to half? What if it goes to $1,000?" That's the problem with trying to time the market. Same with the stocks. You just mentally don't know when to get in and out. But I do see this rebounding. This whole terrorist situation has been a complete pain in the rumpus for the crypto market in general. But people that know better have continued to invest and look at the long-term picture, the big picture. They say when in doubt, zoom out. We zoom out. We see some amazing returns here, some definite volatility. Volatility is your best friend. But people see those opportunities, and those that understand. And it's not for everybody. Crypto is very, very volatile. It's not for everyone. Not everybody understands it. But if you do, this is a really good buying opportunity. Not financial advice, of course. Never financial advice. How long have we been going for? 51 minutes. You know what? Today I said, I'm going to make these streams shorter. That was my goal. I thought maybe half an hour would be a good amount of time for the streams. But every time I try to get under half an hour, it never works. Let me know if you think the streams are too long. Maybe you enjoy it, maybe you don't. I think that's all the information I got for you this week. As always, I'll look in the comments if you have anything interesting to say. Towie, never seen it. 9 degrees here, t-shirt weather, Alan Duffy. Yeah, one other thing. So I see a comment in here about cold storage wallets. Oh, that was a piece of news I actually forgot to show you, though. I was going to show you. Where is it? Somebody got robbed. Did I delete it? Oh, it was a good story. Hold on. No. Where is it? Somebody got robbed, and I wanted to show it to you because it was such an interesting story. Somebody in London. Here we go. Crypto thieves hold victim against the wall and unlock his wallet with Face ID as crimes rise in London. Muggers targeted a man who was throwing up under a bridge, probably drunk. Crypto muggings are becoming more common in London streets, with criminals stealing funds from wallets on their victims' phones. Listen, don't hold your cryptocurrency on your phone, because this is a real story. They accessed this man's crypto wallet and transferred Ripple XRP worth $7,400. The newspaper reported that the victim had agreed to go down an alley with this gang because they were offering to sell him some cocaine, and they had asked for his device so they could type in a phone number. He was forced to hand over his phone. Although it was returned, he later realized $6,000 worth of ether was missing from his Coinbase account. Overall, they lost 35,000 US dollars of cryptocurrency. So, just a little word to the wise. The safest way to hold cryptocurrency, if you are going to hold it, is in a cold storage wallet like this, Trezor. You're just going to make sure you keep your password keys safe. Write them down in a couple of different places. Don't ever give them anybody. Don't type them in online, like on an online password saver or anything like that. That's the safest way, honestly. There was some talk about Coinbase saying, if they went bankrupt, they would take your cryptocurrency, but That's pretty unlikely. They got a very strong balance sheet, but it could happen. There's always a chance it could happen. So, do yourself a favor if you hold cryptocurrency. Get yourself a hardware wallet like this Trezor wallet. Trezor. Ledgers are good. There's a couple of different ones, but I would go with the Trezor myself. And, don't go down an alleyway. Please. Don't go down an alleyway with anybody. Because you might get mugged. You might get mugged for all your money. For all your cryptocurrency. I guess maybe that was karma. That guy was doing something he shouldn't have been doing. Hanging out under a bridge. Hit that thumbs up if you can, if you haven't already. And subscribe to the channel. I noticed some of the people that watch the videos are not actually subscribers. And it helps the Financial Think channel out a ton. You wouldn't believe it. I mean, it doesn't seem like a big deal, but it really does help out more than you would know. And if you haven't been to the YouTube channel in a while, check it out. There's a new video up there. Has all the live streams. You can see right here live. There's a new bike video up here, which I talk about automating your investments and how important that is. So there's a new video there, and I'll be putting up some new content. All you gotta do is hit that subscribe button, which is up here normally. Now you can also join the YouTube channel if you want. So, see what else. Run through these real quick. Bitcoin cold storage. I use the very cheap option, a paper wallet. Don't know what a paper wallet is. Great crypto headline this week. Yeah, Luna rises 1,018%. That turned out to be 0.03 US cents. Yeah, there was some people, trading Luna who were getting in at the bottom line, but super risky. That crypto could also drop down 20-30% in a day, no problem. Let's look at the chart. I saw at one point it had 4 zeros here, so now it's 3 zeros. It's down 13% in the last 24 hours, so be careful if you're thinking about doing something with that coin. Dave says, I traded a couple of stocks of solid companies over a few days and always made a profit, but I used quite large bets and took small percentage profits. I prefer to buy and hold normally now. I think that's really great advice. Good advice. Dividend Dave. Compound investor, yeah, I'm buying and hold in UK blue chips. Yeah, I see the boss of FTX just dumped on Bitcoin as a payment system. He also retracted. I think he tried to clarify some of his statements too. Hey, everybody has an opinion. Alan says, I buy Luna at a penny, give me 10. I was thinking about buying a single Bitcoin when it was £600, but thought it was too expensive. Yeah, I mean, that's one of the problems. Everything always seems expensive when you're at the top, right? Crypto was supposed to be decentralized. That it ain't. There is only one decentralized. I mean, you say as decentralized as it could be, and that's Bitcoin. The rest of them are not. I'm not a speculator. I know everything about all these financial companies. Come on. You need to do a lot of research. Somebody investing in Rolls-Royce, huh? Rolls-Royce. Rolls-Royce, I said, they make some ugly cars. I've seen a few roaming around here, and they just look like these huge boats. And I don't know if it's just purely a status symbol, but I don't see the allure. I don't see the allure. What if your crypto hardware dongle gets broken or lost? It doesn't matter. The wallet itself, the hardware doesn't hold your crypto. It's just a way for you to access it. It's the keys that are the important. You get a 24 word key phrase that you need. So for instance, if you lost your wallet, you can use that 24 word key phrase, buy another wallet. That's how you would access your cryptocurrency, because everything's on the blockchain. It's not actually on the hardware wallet. So you're okay if you lose it or it gets broken. Is Coinbase wallet any good? I've used it actually. It's you're talking about not the Coinbase account but the wallet. The problem with that is it's not a hardware wallet. I wouldn't personally use it, but I think you're better off just getting a Trezor, an actual hardware wallet, and not using Coinbase's wallet. Even though I do hold cryptocurrency on Coinbase. I don't think that anything is going to happen to them as a company, but again, for sure I would definitely get a hardware wallet. Where you give your top 5 peer-to-peer companies? What about your top 5 crypto companies? Well, if you go to financialthing.com and you click where I invest right up here, I need to update this. But you can see my current portfolio. This has changed a little bit. I'll update this week. But here's my cryptocurrency portfolio right here. These two are the majority of my holdings are in Bitcoin and Ethereum, and I do have smaller positions in these. Not necessarily that I believe in these companies long term. In fact, some of these companies probably won't exist in the future, but these are the ones that I've taken punts on based on my research for what I think is going to happen in the future. I think now is a pretty good time. Well, it's a lot better than when I bought some of these companies. I mean, the markets could certainly go down a lot more, but yeah, you can look here on the where I invest link on financialthing.com. I would really, if you're not somebody who's a risk taker, I would just stick with Bitcoin and Ethereum and possibly Solana. The rest of them, it's a complete gamble at the moment. Hope that helps. Robert. Anyway, we're going to wrap it up. Been on way too long. See you on Thursday for the peer-to-peer lending live stream as usual. Have a great evening or daytime wherever you are. Take care. And we'll see you on Thursday. Hope you enjoyed the stream. Take care. Bye.